welcome. This is going to be a quick tutorial on Financial Sudoku that will show you how to do initial setup and some of the things you can do after you complete initial setup. So I'm going to head into Velocity Banking, and I have not set up my profile yet, so this is the first screen you're going to see after the disclaimer. So I'm going to go ahead and put in a sample job. And the income that we're going to create on this is $6,000 a month. It's going to be a full month of pay, so I'll go ahead and check that box. The federal taxes are going to be about $150 on this. Social Security, $75, Medicare, $85, state income tax, $200, and state kills me, and I'm not going to have any other deductions. This is semi-month. I get paid twice a month, so I'll go ahead and put that in. And my next payday is going to be on May 15th. So now I'm going to go ahead and save those changes and move on to the debt screen. So I'm going to add a mortgage here. The interest rate on this is going to be 4.19%, and I owe $200,000. I have 340 months remaining. I'm about a year and a half in, and this is due on the 4th of May. I'm going to save those changes, and then I'm going to add a car loan. The interest rate on this is 6%. My current balance is $14,000, and I have 40 months left. This payment is going to be due on the 11th. Then I'm going to go ahead and add a line of credit. So right now, the only line of credit that I have access to is a credit card. So I'm just going to go ahead and put that on there. I have 13.2% on there. Current balance is about $5,000, and my credit limit is about $15,000. That payment is due at the end of the month on the 28th. And that will bring us to the living expenses page. On the living expenses page, we're going to go ahead and add the rest of our living expenses. This is going to cover everything. I throw these on my credit card, so I don't need to put anything but one. And currently right now I'm spending an extra about $1,400 a month. And this payment is due at the end of the month because it comes along with my credit card. So it's also going to come in on the 28th of May. So I go ahead and finish all of that. That'll take me to the budget setup screen. On this screen on the left side, we have all of our details for our budget. And on the right side, we have our budget metrics. So it's going to show us our gross income, our net income, and then the 3 DTI metrics that we use to show what's going on in our life. Then it's also going to show us our cash flow. So I'm making a lot of money here and not spending a whole lot, so my cash flow is nearly $4,000. We're going to adjust that because I just made a large purchase and now I have a larger living expense. So I'm going to go ahead and add in a $33,000 a month payment that's going to come in on the 28th and save that. Cool, now my cash flow is down to $1,000 and it's a little bit more accurate. So right now this is nearly an optimal setup. So we've got our debt to gross income is about 24%, which is about right. Our debt to net income is 26%, which is also pretty good. Living to net income is 81%. We want that to be below 82, and our effective tax rate is 8.5%. That really just means I'm running a business and I'm able to take deductions. So on this screen, the other item that we have here is this debt to income comparison center. In the debt to income comparison center, we're able to add debt to our life and see how it's going to affect our situation. This is very useful when you want to see if you're going to qualify for another line of credit or other item. Perhaps you're trying to acquire rental real estate. So let's say we're able to get a line of credit. The payment's going to be $600. So by calculating that, we can see what the new debt to gross income is. It's 34%, so we should qualify for it. If we raise it all the way up to $1,200, it's 44.1. Banks are going to typically look at about 43%. That might be a little bit too high. So based on what that payment's going to be, you're able to look at it a little bit more subjectively. All right, we're going to go ahead and move on to the visual results. And what we're looking at here is the cash flow that's produced. You'll notice the cash flow spikes every few months. What's happening there is the number of payments that you're getting paid changes over time. So it's looking at things and calculating what you're going to pay for each payment. You can look at the different methods and which one's going to pay it off faster. Of course, flip all always wins because it's incredibly effective at managing loans efficiently. So what we're trying to do though is we're trying to take our method from traditional all the way to flip all. So we start with moving to chunk. Maybe we start by sweeping our credit card and then using our credit card to make chunk payments through our car loan, get that all paid off, and then remove our mortgage one by one, payment by payment. Then we look at the flip method. Maybe after we pay off our car, we're in a position where we can get a large amount of credit, flip it all into one large loan, and we move on. Additionally, we want to look at the total debt reflection and itemized monthly debt. What this is showing us is the payment in relation to how much debt we actually have. So our mortgage here is taking up 91% of our debt, but it's only 16% of our gross income. Whereas our car loan is 6.4% of our total debt and 6.5% of our total gross income. So it's a much larger chunk of our cash flow for a much smaller loan. It's better to pay that one off quickly. We're going to move right on to the monthly calendar. In the monthly calendar, we have our lock budget on the left side, a table that shows you the change and the interest that you're going to get charged per day based on your budget. And then we have on the right side, we have a chart that shows you how the daily interest is changing throughout the month. And then we have a simple budget breakdown showing you what percentage of your gross income each bill takes up. Scrolling down, we have a calendar that shows you what's being paid on what day and what the overall net change is going to be. All right, we're going to move right along to the monthly checkup. This is really the main page that you want to be using more often than any other one. Once a month, hop in, adjust your details, take a look at what's going on. The important thing to look at here is the next chunk return rate. So this chart is showing us what the loan's going to look like. This chart doesn't take into account the line of credit you're using. However, the budget overview does, as well as the 0 to 60 calculator. But this is purely that loan, just looking in depth at that loan. So it's going to show us that rate of return. And what's important here is to be efficient in our finances. So if you're able to find a better return somewhere else, take advantage of it. That's a great opportunity to be more efficient, as long as you're comfortable with the risk that's going to come with that return. What we're looking at here with this velocity banking is increasing our risk-free rate, which allows us to get a larger return without really taking on more risk. We're going to move on to 0 to 60. This is a very simple comparison that goes into some pretty advanced metrics for a simple calculator. So we're going to compare building reserves with a $5,000 amount today, how much I have in the bank, and we'd like to have 6 months expenses, so we're going to put in about $18,000 as the end goal amount. We're going to compare that to paying off all of our loans using our flip method without reserves. So submitting that will show us your structure strategies, financial efficiency index. And looking at that, the main scenario outperforms the comparison scenario, but it's only because it takes into account reserves as being incredibly important. And I think this is something that a lot of people overlook. The power of reserves gives you not only peace of mind, but the ability to have a lump sum of cash that you can use to implement and increase your life. So the flip all method is going to beat everything else as far as paying it off quickly in your cash flow, but it's important to also look at the amount of income you have to protect against tomorrow. If you don't have that reserve account, it's better to build that first. So that's important to note. Lastly, we have our payoff methods, and these are a bunch of charts and tables that dig right into the details of each payment method in your budget. So it's going to look at the next loan that you should be paying off according to our system, and that's going to show you what the amount is going to be for each period of time. So the flip methods are going to show you the amount of principal as your cash flow plus the loan principal, and then the chunk method is going to show you the additional amortized payment that you're going to be making, the extra curtailment payment. And then finally, we have the comparison report that's going to bring everything all together, and you can compare which one is best. And of course, the flip method will almost always win this. So that's something that you can take into mind when you're moving forward. All right, let's move into the more advanced stuff. We only have one quick thing to show you here. This is the settings that we have. So for non-recurring items, income or expense, this is anything that's really more of a one-time payment, and it's going to allow us to look at one-time payments and what impact it's going to make on our life. It can also be an income. Maybe you get a bonus at the end of the year in December, you can throw that in and make that accounted for in all your calculations. Then we have our next loan to pay, and as you can see, we can pick which loan we're going to chunk first. So our system automatically picks the best loan according to us, but we don't know the in-depth details of your financial life. There's no way for us to know if you have a loan that's just really annoying or has some really bad terms that you want to get rid of really fast. So that's an important thing, that you're able to come in and pick which loan you want to chunk first. And it'll make that the one you go in depth looks on. That affects all the calculations everywhere on the site. Then we have additional curtailment. So once again, if you get that bonus and you want to take a little bit of extra money and put it towards your loans, this allows you to do that and to show what it's going to look like when you do that. And finally, we have the preferred tool. This will allow you to choose which line of credit you want to use for your sweeping. We automatically pick the one with the lowest interest rate, but that may not be the best one due to terms on that credit line. So make sure you look a little bit closer and get the one that's best for you. All right, this has been a quick introduction to everything that we offer. If you have any questions, please make sure to reach out, and I hope you enjoy the product. Thanks.